Good day. Ira Epstein with your financial market wrap-up for this June 29, 2020 at 5:50 p.m. Central Time. Off camera, you didn't see. I get all these words sometimes mixed up. You know, an interesting day for all of us today. The stock market was down hard last week. We had a big rally today. You'll see that in a minute as we go through the charts. And we're getting some follow through tonight. This 25,600 level, that's been there before, done that. We'll see what it can do. Metal markets, gold still looking quite good. We had a failure today in a couple of the currencies. You saw the Swiss franc get hit rather hard and the euro. And they got up first to the 113 area here. The market got right up to its 18-day average. Couldn't go anywhere with it. On the energy markets, we're going to be looking here to see in a day or so what the API and EIA reports look like. We had a heck of a rally in nat gas. Good, it was too low. Now the question is, what does it do on the rally? And the question is it going to be a sale again because there's so much supply? Then we look at bonds and notes, fairly flat. So let's go to the financials. As you can see in the S&P, the first thing your eye should go at on the weekly area chart of closes is the market is staying over the 18-week moving average. So even though you're in a corrective stage, the bias is up. The two are fighting each other. You've got a pattern for the first time, and you haven't had this, by the way, since March, where you've got a clear pattern of lower highs and lower lows on a settlement basis. That's important. To negate this pattern, you have to get all the way up over this high, and we can get there, and we can see that that was 31.61 and a quarter. And we're certainly not there at this point, but we're not that far away. You're only 100 points, and in this market, that's nothing. When we take a look at just the chart with nothing on it, and this is a daily bar chart, you can see how the market's been in a corrective phase. Not a pretty one. The line is better here than anything, but why draw them? You can see that you're caught between this high and this low. I think I've been saying that to you for a week and a half, and that's where the market's at. When we take a look at what's going on the daily chart, you do have a pattern of lower highs, lower lows, bearish. The market is underneath the 18-week moving average. Bias is down. Support the 200-day average. Do you see the gray line? So what the market did is when it got over that 200-day, it came back here and challenged it, got over it again, and it's playing the same game right here. Now, what it didn't do in the past was after this test, it didn't come down and fail. If this market starts failing here, then I think that the 100-day average comes into play sometime in the summer. We'll see if that's the case. In order for the market to negate the downtrend, it's got to take out 30.82, which means the 18-day average of closes at 30.94, while its resistance on rallies, it would, if the market gets to it, it negates the downtrend. Interesting time. Appears to me this market's got to prove it can stay under the 200-day average to have any legs to the downside. When we look at Bollinger Bands, you haven't hit an upper or lower Bollinger Band since back here at the beginning of the month. And after you had hit it, you fell back to these two moving averages. And only just recently have we gotten away from hitting the 100-day average as the market's now playing at that 200-day. And yes, even though it's over it, I call it playing against it. In momentum, the market is flat. So I see a market that is waiting to see the later in the week jobs numbers. It could be. You know, what are we going to see for the unemployment rate? That's going to come out, I think, Thursday morning, if I'm correct. Remember, everything's moved forward because the marketplace is not open on Friday in the normal way. Cash markets are closed. A lot of the grains and those other markets will close. And we're going to see the financial futures close at noon or noon 05, 12:05, around that time on the electronic platforms. So be ready for it. It's going to be an interesting week, but we could be at the point where traders are getting ready for that abbreviated holiday weekend. In the NASDAQ, we have had the pattern of lower high, lower low. We've seen that before, but you are unable to stay for any period of time so far under that 100-day average. So a correction, yes, but anything more than that, I'm not certain. And the market's taking time out to work off. It hasn't finished it, it's present tense, to get both numbers of the slow stochastic back under 70. That takes a little bit of time or a big price break. Neither have happened. Not enough time's gone by. In the Dow, I still see the market as the overall bearish component of the indices. It's corrected an oversold condition. Both numbers are no longer under 30 or approached it. The resistance in this market's clear cut. I think the pros are going to be looking here at the 25,950 area as a potential area that they want to either sell into or the bears defend that area. You'd have to get over 26,294 to change the trend. The question is, do you even want a position report going into the all-important jobs unemployment data, basically we can call it? On the Russell, this has been strange. It's become one of the better looking of the charts. It was terrible looking for the longest period of time, but it's suddenly getting bids and it's fighting on a regular basis at this 18-day average of closes. If I come back here, you're not. You're just getting to that point of fighting here, and let me get here. You're not fighting there. So it's very interesting what it's done. So I think traders, as the economy's opening, for whatever reason, they seem to be drawn to these smaller cap stocks. Interesting. In the VIX, the battleground has been, we've been in an uptrend. The market is hovering at the 100 and the 18-day average of closes with higher lows and higher highs, but it will take very little to turn it down. Any move under 28.93 and a close under 28.80 will turn the trend of this market down, which is bullish for the stock indices, putting into play the potential, I don't know if it'll get there, of hitting a lower Bollinger Band if you had a big price break. In the T-bond market, you have what's called an embedded bullish reading. Now let me define that. Markets typically trade between getting overbought, getting oversold, just like these numbers. You can define them in many ways. On slow stochastics, the traditional way of doing it is using an 80-20 reading. 80 up here, 20 on the downside. I modified that many years ago to a different reading that I teach in my charting course to define what I think is overbought and oversold, and I'm much more comfortable with that. When a market converts, and that's what I love about slow stochastics, it could convert from overbought to getting even locking in a bull trend, which if you think about the logic, it makes sense. We know that to get overbought, the market typically had to have a rally. The question is that rally embedding, locking itself in and trying to really move out? Well, so far, the definition for me at least is when both numbers of the slow stochastic are going sideways over 80 for several days or more in a row, they are. And when the red line closes under 80, they've lost the upside momentum. And until that occurs, which is just what you have in play here, I look for the players to be buyers on the break, looking for the market to go up to the upper Bollinger Band or a closest other profit objective. Now, I also use window envelopes. You may not, but I do that in my morning subscriber video. When I look at, and by the way, window envelopes are a deviation away from the 18-day average of closes for me. Other people look at it other ways, but I use it that way. And I have a unique way of finding it that I've never taught to anyone. It's not even in my charting course. I make that available purely as the numbers. May one day teach it for another premium. We'll see. You know, I'm getting older. But in any case, higher lows, higher highs, embedded reading. I'm still bullish on this market. Can it reach up to the 139.26 level? Now, you do know this flies in the face of the stock market going higher. If the stock market's going higher, normally traders will say, well, things are getting better. Why are interest rates so low? They should not be that low. So the two are not going side by side unless you get a catastrophe. COVID-19 is one. You get a big outbreak, why would the stock market keep rallying on it? I understand it. It's the only game left in town when interest rates are low. But you got to ask yourself the questions. When you've got the SEP dollar index, I just see sideways action, not trending, overbought, caught between the Bollinger Bands and not even trying to hit them. Not really a lot going on there. Now, what does go on is at 5:40 in the morning, I start talking to my subscribers. And believe me, folks, I cover a lot of detail. It's typically a 20-minute video. So I'm recording, I render it, and it's out to them right after 6:30, very typically in the morning, and that's AM Central Time, because I want them to get a feel of the trade ideas. Number one, the charts are throwing out that I'm interpreting, but I want to give you the morning fundamentals. So we're going to review 40 charts, but all the major commodity sectors, every single one of them. And how it works is this way. I'm going to give you first the touch of fundamentals. I'm going to show you and I'm going to display for you what I've seen in Europe. So I write a headline board for you. You're going to see what I'm seeing out of Asia, then Europe, and then what the morning reports yet to come out from the U.S. look like, because when I'm recording, the U.S. reports are not out. But we've seen China's reports, Japan's, Europe's, South Korea's, I can go on and on. I also, in these markets, pay attention to COVID, of course, and if I see something important, you're going to hear it. Then from that point, I'm going to tell you where I think you buy, sell. Forget the word pros. I'm going to talk to you. I want you to do this. I want you to do that. Am I going to be wrong? It's a guarantee I'm going to have losing ideas. I'm also going to have winning ideas. You got to balance the two. Nobody walks on water starting with me. It's that simple. And I am sure there are traders that are out there better than me, but they just don't do what I do. And I think I'm better than most. It's really that simple. I'm going to cover with you all these areas. Now, time is money to you. I don't expect you every morning. Where am I going to get 20 minutes? On our website, there's a scroll bar. On our handheld app, you can always go fast forward. So there's ways. But the scroll bar, as you drag it, it's going to tell you what section you're in and let go of it. It's neat. It saves time. Traders seem to love it. And the traders that I talk to, and I do talk to my subscribers, they can call. I will call them back. They can write me, and many do. And from there, we start talking and, you know, taking in what's going on. And I think that's important. Most people that write these reports, try to get to them. They won't talk to you. Now, I have been saying throughout a good part of since we've been in COVID that I was going to do webinars, and I know I haven't lived up to that. I've had all kinds of, been busy, that's to put it mildly. I'm making the time. So now the question is, you know, this weekend I did my video for you on Saturday. The viewership was as strong as I'd put it out on a Friday. So I'm just wondering, should we every now and then consider a Saturday morning webinar? Doesn't take your time away. Many people are home early enough to do that. I know golf might interfere with it. It's not going to be more than about a half hour. I'm thinking about it, okay? It could also be a Sunday night one. I'm thinking about it. Don't know yet. But I've got my crew coming in. We're going to start practicing, so I'm up to snuff, and then we'll do that. If you'd like to get, though, the videos we have here, I'm talking to subscribers, just go to our website, www.iraepstein.com. Under the word research, it's all explained for you. I'm Ira. I appreciate you watching. I will talk to you tomorrow.